This is an informedtrades.com introduction to the ultimate oscillator. The ultimate oscillator is one of the many indicators developed by Larry Williams. It was popularized by a 1985 issue of Stocks and Commodities magazine. The indicator provides a reading of price momentum by sampling three differently weighted time frames. This use of multiple time frames is intended to combat some of the problems with other oscillator indicators, such as premature signals that a trend is coming to an end. The ultimate oscillator calculates buying pressure by subtracting the close from either the low or the prior close, whichever is lower. An increase in this buying pressure reading will cause the indicator value to increase. Finally, Williams suggests multi-stage buy and sell signals for using the indicator. So basically, it's to your discretion how conservatively the oscillator is used. Okay, I want to give a quick outline of how to calculate the ultimate oscillator and the weighting scheme that results in its values. First of all, you need to set 3 period ranges, the second of which has to be double the first, and the third is double this second value. So in this case, 7, 14, and 28 for the 3 ranges. And then within these periods, buying pressure and true range must be determined. Buying pressure is considered by Williams as the close minus whatever's lower, that low or the last day's close. Whereas the true range is whichever is higher, either that day's high or the prior close, minus the whichever is lower, that day's low or the prior close. Once those values are determined, you create 3 averages by dividing the sum of the buying pressure values by the sum of the true range values from each period range. So the 7-period average is equivalent to the sum of the 7-period buying pressure values divided by the sum of the 7-period true range values. And this is repeated for the 14-period and 28-period averages. Finally, the last stage weights these averages together to create the final value. The shortest here, the 7-period average, is multiplied by 4, the middle by 2, and the longest one here, the 28-day period, is multiplied just by 1. This sum is multiplied by 100 and divided by 7 in order to get the final indicator value. Okay, so Williams' buy signal has 3 steps. The first is a bullish divergence occurs between the indicator value and price. Basically, price reaches a new low and the indicator fails to do so. The second step of the signal is that the oscillator value dips below 30 during the divergence. This is basically to guarantee that the security is oversold or at a relatively extreme low as far as the buy signal. And the final step, that making the signal complete, is when the oscillator reaches a new high above the highest high of the period of the divergence. Alright, let's look at this all on a chart. Okay, so here in early March, price reaches a new low, but the indicator fails to do so, signaling a bullish divergence. The indicator has also just dipped below 30, which fulfills the second stage of Williams' signal. And then a new high is reached after March 11th, completing all 3 stages of the buy signal. The sell signal is, to some extent, the converse of that buy signal. It is signaled not by bullish but a bearish divergence between indicator value and price. So price has reached a new high, whereas the oscillator has not, indicating a decrease in positive momentum or buying pressure. So the second step of the sell signal is that the oscillator value rises above 70, during the divergence, and the signal is complete when the oscillator makes a new low below the low of the divergence. Okay, here is another chart example. We can see the bearish divergence developing in early June. The indicator has just gone above 70 within the frame of the divergence. And finally, the sell signal is complete as price dips down to a new low within the divergence in late June. Alright, this has been an introduction to the Ultimate Oscillator. If you've got any questions or knowledge to share, come join us in our learning community at informedtrades.com. Thanks for watching and good luck in your trading.